Hello and welcome traders. Welcome to Precious Pips. I hope all of you are doing good. So today is 1st January 2026. A very happy new year to all of you. So let's start with our video. So how to plan stop loss in XAUUSD gold. In this video, I'm going to share my exact stop loss planning technique. And I can guarantee you no one on YouTube will be teaching this for free. Okay traders, so let's start. So most of the traders don't lose because of bad strategy. Okay, so listen carefully. They lose because of bad stop loss placement. In this video, I'll teach you how to plan stop loss in XAUUSD using psychological levels. Simple, clean and practical. So this will be the most powerful video. Okay traders, so watch the video carefully and watch till the end. So this is part 1, basic understanding. If you want part 2 with advanced supply demand logic, so please comment below. So first, what are the psychological levels? Okay, so let me explain why psychological levels are important. So first we will draw some psychological levels over here. So as you can see traders, this is 4500. So this is a psychological level number 1. So same way you need to draw 4400 and one more we will draw. Okay, this will be 4300. Okay, so we will also draw 4600. Okay traders, so understood. So 0 0 0 0 are the big psychological numbers, okay, are the important psychological numbers. So institutions don't trade like retail traders. Okay, first you need to understand this. A retail trader might trade 0.01, one standard lot, maybe 10 or 20 lots. They can enter anytime and exit anywhere. But institutions, they trade hundreds or thousands of lot. Okay traders, their lot size is huge, so they cannot buy or sell randomly. Okay, because managing such big positions is extremely difficult. So what do? They plan their trades around these psychological numbers, okay, which I will show you on the chart. Just a moment. At these levels, liquidity is available. Okay, many buy sell orders are already placed. So that's how institutions build, manage and exit positions smoothly. Okay traders, that's why price reacts at these psychological levels. It's not magic, it's position management. Okay, so we will make this chart more clear. So now we have marked 4600, 4500, 4400, 4300. Okay, so now we will be marking 50% of this range. So like this. Okay, so that will be 4550. Okay traders, so again we need to mark here 4450 and one more over here, that will be 4350. Okay traders, so we got this thing. Imagine trying to buy 1000 lots of gold. So if you buy randomly anywhere, okay, so if you are working as an institution and you're buying 1000 lots of gold, let's say minimum 1000 lots of gold, okay, 1000 lots of gold, you are buying 1000 lots of gold. Okay, so you cannot buy or sell randomly anywhere, okay, because it will be hard for you to manage. It will be hard for you to manage your stop loss. You know, you set your stop loss. Setting your stop loss will be very hard for you. Okay, so managing that position will be extremely difficult for you. But at psychological levels, there are thousands of pending orders. That's where big players can enter without disturbing the market. Okay, so these psychological numbers, already there are orders available. Okay, so as you can see over here, the market came below and took this level. Okay, so if you have your level aligned with psychological numbers, so you can make use of it. Okay, so I'll explain you more clearly. Retail traders react to price, but institutions plan the price. Okay, now we will do some more marking. So now exactly I'll explain you how you need to plan your stop losses. Okay, so now we need to mark one more level over here. Okay, the half of this, that will be 4325. 4325. Okay, so same way here you need to mark 4375. Okay, so you need to mark over here 4425. Okay, 4475. So same way you need to mark, same way 4525. 4575. Okay, so I'm done. So what you can do is you can lock these lines so that it doesn't move. So you can lock it like this. Okay, so now your levels are locked. Okay, so for intraday trading, you need to mark one more level. I'm showing you how I do it. Okay, so this is the way exactly how I do it. So we need half of this. Okay, and we will keep this light gray color. Okay, okay, this is okay. We need little more darker. Okay, so this is good. So now what is the half of this? So half of this will be 3312.5. Oops, sorry, 4312.5. So same way you have to draw like this. Okay, 25, 35, 37.5. So as you can see, traders, so what I'll do is I'll complete this and I'll pause the video. Okay, traders, so we have marked all our levels, and now I'll show you. So same way you need to do it on your whole chart. Okay, so once you do it, you lock all your levels and you're good to go. Okay, so this will be your main chart and this will be your levels chart. Okay, so now let's move on to the 15 minutes time frame and I'll explain you. Okay, so this was our last all-time high. Okay, this was our last all-time high that we made. So it was exactly from 4550 level. Okay, as you can see precisely. So as you can see, traders, precisely from this psychological level. Okay, so now let's imagine for an example. So you are, let's say you are following some level, you have drawn some level. Okay, this is just randomly. So let's say you have drawn this level, you have drawn this resistance level. Okay, so price is respecting this level. As you can see, price is respecting this level, and suddenly the price break out of that level, and now that same level is again working as a resistance. Okay, so after the breakout, level worked as a support, the same level is working as a resistance. Okay, so when I'll be planning to place my entry in the sell side, okay, so when I'll be planning to execute my position, so let's say my level is here. Okay, so my level is here. So this is my level. So let's exactly know our level: 4516 and 4524. Okay, so now I have this range of selling, so I know that my round number is near around this area, 4525. So I can use this as my stop loss. I can place my stop loss above this level. Okay, so I have extra confidence that there's a round number psychological level over here. Okay, there's a round number or psychological level over here, so I have that extra confluence. Okay, I have that extra confluence. So how I'll be planning my entry? So my entry is this: from here, from 4516 level. Okay, I'll be planning above 4516 level. I'll be planning above this level and I will place my stop loss over here. Okay, traders. So that will be an extra piece of confidence for me. Okay, traders. So this will be my stop loss. Let's say 26.5, and then I'll be targeting next psychological levels. Okay, like first level was 4500, then same next level, next level, next level. Okay, until my target. So whatever our target, so we need to follow like this. Okay, traders. So psychological numbers are a perfect confluence for your stop loss planning. Okay, traders. Psychological levels exist because institutions need liquidity, not indicators. Okay, traders. Price respects levels because big money needs planning, not guessing. Okay, traders. So always plan your stop loss. So if you have confluence with psychological round numbers, then your stop loss will not get hunted. Okay, most of the time retail traders trades movement. Okay, so we retail traders, we trade the reaction. Okay, but institutions trades liquidity. Okay, traders. So this is our liquidity strategy. So it's very simple, but it's real effective. Okay, traders. It will help you plan your stop loss perfectly. Okay, traders. So I want to bring you the part 2, where I will explain you how you need to plan your stop loss according to the supply, demand, or your edge. Okay, so how you need to plan according to that. So in the next video I'll be explaining you. So till then, peace out. Once again, a very happy new year to you